It's Sunday, which means it's recap time here on the Retirement Quick Tips podcast. The theme this week was the third quarter 2024 economic and market update. Now, I do want to recap the week, and I'll do that in a second, but I did promise that I would touch on the election. I know many of you listening were just a couple of weeks away from the election. You're probably wondering how your investment portfolio is going to be impacted by the outcome. That's a tricky question to answer because we do have a lot of data on this. Obviously, we've had many presidential elections and we have the historical data going back 100 plus years. And so we can see what was the impact leading up to the election, what was the impact after. And it truly is challenging to draw some conclusions, because there's obviously a lot going on that has more of an impact on the markets, like what the health is and the state of the economy is. And that has mattered actually quite a bit for the election results as well. But when you look up, for example, in a presidential election year, how did the S&P 500 do in that period? You know, you look 6 months after the election, a year after the election. Generally, some of the conclusions you can draw is that there's a couple of trends. One is there is some additional volatility bouncing around leading up to the election. Returns have tended to be a bit lower, both leading up to and after the recession or after the election. But again, it's not that meaningful. There's a couple of things happening here. One of the things that can happen that you see, I think, pretty commonly, if you take the economy out of the picture and, we're not in a recession, it's important to keep in mind that the market, above all, does not like uncertainty. So it's very likely that you could have a decent return in the fourth quarter after the election, because at least we know who will be in the White House. We know what the makeup of Congress will look like. And so then you can get an idea of what the policy will be. What is the tax and regulation and spending policy going to look like? So you will get some clarity on that after the election. The markets like clarity. We are not currently in a recession. So I don't think that you're going to have these big dramatic shocks, at least in terms of the markets. Going back to policy and regulatory and tax environment, the other thing that I would say is that a lot of people are concerned, especially if you are on one end of the political extreme and you know who you are, right or left. I find that the clients that are sort of further out on the edges in terms of where they stand politically are a lot more stressed about the election and how that's going to impact their investment portfolio versus clients that I talk to who are more or less in the middle. Even if they sort of lean to one side and they're going to vote a certain way, if they're not consuming the news cycle 24/7, that certainly helps with them not connecting the dots between, if my guy or gal doesn't win, then I'm going to sell everything and move out of the country. I have heard that, but thankfully it's not too often. And the likelihood is, and the thing to remember with the election is that both of the candidates are relatively well known. Donald Trump's already been in office. We know what that was like. And Kamala Harris has been vice president for the last 4 years, and we know what that was like too. And they both have longer histories and track records. So we know a lot about how each candidate is going to govern if they win in November. So don't let the election and some of the stress and anxiety around that drive you to make emotional decisions with your investment portfolio. And that actually brings me to next week's topic, which is keep calm and vote on. It's a play on the keep calm and carry on, but it's not meant to be political, but it is meant to do a deeper dive on some of these topics as it relates to connecting the dots between the election and your investment portfolio and some of the things to keep in mind. So I actually will be talking about that more in depth next week as I think through a little bit more what I want to say on that topic and what's going to be helpful to you as an investor that isn't sort of caught up in all the rhetoric that is out there right now. But as far as the takeaway from this week, I would say the most important takeaway is something that I touched on yesterday when I talked about investment opportunities is I haven't seen in my 17 years as a financial advisor working directly with clients a better time to be rebalancing. Many of you listening are overweight in stocks relative to where you should be, and you're underweight in bonds. But there's a lot of opportunities that come with investing in bonds right now because rates are still very high and the Fed has just embarked on a rate cutting cycle, which means the opportunities will not be here much longer if they continue cutting rates. So, takeaway is take the time to evaluate your portfolio, rebalance if you are not where you should be, and don't be sitting in cash or money markets because you'll see the interest that you were collecting dwindle. Hopefully not too fast, but I suspect faster than you might have hoped for. All right. Thank you so much for listening this week. If you're enjoying the podcast, please share the show. Please subscribe or follow. If you're interested in learning more about working with me, you can check out my website, truenorthra.com. There you can schedule a 15-minute call to speak with yours truly about any topic that's on your mind related to retirement. Thank you so much for sharing the love, spreading the word, subscribing, following. I hope you have a blessed Sunday. My name is Ashley Michike, and this is the Retirement Quick Tips Podcast.